All right, ladies and gentlemen, we are coming live from our Joburg office. Good morning and welcome back to the opening bell with myself, Tshepo and Ashley. And this is brought to you by TD Markets and TD Markets Academy every Mondays to Fridays at 9, streaming live on YouTube. I trust and hope that everyone is doing good this morning, is well this morning. It's been a week filled with a lot of news updates, a lot of market reaction. As you guys know, we are still in the midst of the war. All right, the Middle East is still ongoing. However, the latest update that Ash spoke about on yesterday's session is that, which we saw, but he told you guys, right, give you guys an update, is that there is a proposed 2 weeks ceasefire, right? And that is because the US wants the Strait of Hormuz opened, right? So that is why we saw reaction from oil dropping, gold pushing up, the dollar taking a knock. Because of that, the possibility of a ceasefire. So what we saw yesterday, how the market reacted yesterday, you know, if you really look into it, you could get a signal on how the markets could react once there's a ceasefire, right? What I mean by that is when that proposal went through, right, and the two parties agreed to a ceasefire, how did the market react? The dollar took a knock, right? The dollar took a knock, oil went down. So which means whenever there is really a ceasefire, whenever the war ends, you can anticipate the dollar to weaken. You can anticipate the dollar to weaken. You can anticipate the oil to go down, right? That is what we saw yesterday. So that was a leading indicator to what could come. All right. So at the moment there are uncertainties. There are ceasefire uncertainties, right? Because Iran has its own demands. The US also has its own demands, right? So what's happening at the moment is the two parties, even though they agreed to a ceasefire, but the two parties are still yet to consolidate, to solidify that, right? To solidify that and to end the war. At the moment, we can still say that the war is ongoing. The Strait of Hormuz is not opened as yet. The US is willing to assist with the traffic, right? The moving of the ships passing the Strait of Hormuz. The US is willing to assist with that. And also, there's a lot of speculation that the US is losing this war, right? There's a lot of speculation because if you watch the news, if you listen in, if you gauge the sentiment is that Iran did not give in. Iran responded with fire, all right? They responded with fire, and so the US are the ones that wants a ceasefire, not Iran. The US wants a ceasefire because Iran is in control. If you really look at this war, guys, right? If you really look at this war, Iran is in control of this war. They are in control of this war. They are in control of the Strait of Hormuz. The US does not have complete control over that. Iran has that. And we all know that Strait of Hormuz, it is where the 20% of global oil supply comes from, all right? So if Iran has control over that, the US can do nothing but to want a ceasefire, all right? So if we really look at this, Iran is winning this war, but because it is the US, it is Donald Trump, and you know Donald Trump is always on the news, always talking. Sometimes he even lies, right? So because of that, we can say, yeah, the US is winning the war. But I believe Iran is in charge of this war. If Iran was not in charge of this war, then Iran would want a ceasefire. That's it, right? So we've been talking a lot about this war. We've been mentioning a lot of things. Something is happening today and tomorrow, all right? We saw oil prices go up. We saw inflation go up. Wherever you are around the world, maybe prices went up as well. Here in South Africa, petrol prices went up and other things, right? So today and tomorrow, there are two reports, inflation reports that are coming out. The first one is the PCE report. The second one is the CPI report. both the PCE and the CPI are inflation data, right? A lot of traders are focused on the CPI, which is okay, right? But the PCE is also as important as the CPI. So what is the PCE and what is the CPI? PCE, guys, it stands for personal consumption expenditures. That is what it is, personal consumption expenditures. While CPI stands for consumer price index, right? Both are inflation data. So the PCE, it measures the consumer spending in the US, right? But now this consumer spending, it is on behalf of the consumer, So it uses the actual spending data, consumer spending, but it focuses on the spending on behalf of the consumer, not the consumer spending, right? I hope that makes sense. And then when you go to CPI, CPI tracks the average change in the price of goods and services purchased by consumers. So these goods and services, we all know that it is gas, rent, clothing, healthcare, grocery, transport, etc., right? So now it focuses on a fixed basket of goods and services purchased by consumers. Now the PCE, it focuses on that, but spending on behalf of the consumer, not the consumer spending it, but spending on behalf of the consumer, while CPI focus on consumer spending. And the term they like to use is out of the pocket spending. So CPI focuses on that, but it's known as out of the pocket spending, while PCE, it's known as spending on behalf of the consumer. I hope that distinction makes sense. So the PCE, guys, right? It is the preferred inflation gauge. It is the preferred gauge of inflation, right? The Fed uses the PCE price index, right? Especially the core version of it, as its preferred gauge of inflation for setting monetary policy like interest rates, right? We all know that their long-term target is 2% inflation, right? They want inflation, yearly inflation, to go down to 2%. Now the CPI is still as influential, right? It's still as influential because markets react strongly to CPI releases because it influences expectation about interest rates. So there you have it. This is the difference between the PCE and the CPI. So remember, the PCE, it's the Fed's preferred gauge of inflation, right? However, the CPI is also important, is also as important, right? Because markets react strongly to CPI releases. All right. So with what's been happening in the past month, right? I think today it is day 35. I think it's day 35 of the war, if I'm not mistaken, day 35 of the, or 36th of the war. So in line with what's been happening, right? I'm looking at the expectation, the consensus, especially from the yearly CPI. So if you take a look at the inflation rate year on year, right? Year on year, at the moment, it's sitting on 2.4%, all right? The consensus is that it is going to go up. We're going to have an uptick of between 3.1% to 3.3%, from 3.1% to 3.3%. So this shows you that, yes, prices have gone up, oil has gone up, inflation has gone up. So tomorrow's CPI, yearly print, we can expect an uptick, which means there's going to be a lot of volatility in the market. There's going to be a lot of movements one can capitalize, right? So as such, remember, we are going to go live at 2 p.m. South African time, 2 p.m. And we are going to look at the CPI data tomorrow at 2 p.m. like we always do with the NFP and the CPI, right? So be sure not to miss that one out because there's a lot of talking points, a lot of key data we're going to provide for you guys while we're waiting for the actual data to come out and the movements and the markets to react. All right. So that is basically the focus for this morning, right? The focus for this morning. We have been looking at the charts. We have been giving updates on the war, but now we're not going to forget about the inflation data that's coming out this week, which you guys can really take advantage of. All right. So, ladies and gentlemen, that is the difference between the PCE. So, do have a look at the PCE data, it's very important, and also the CPI data, very important, right? So, that is what we are focusing on for this morning, right? We will have a look at the charts on tomorrow's session. Later on today's trading room, we're going to have a look at the charts. But yeah, the CPI is the focus, the PCE is the focus for today and tomorrow. All right. And on that note, that's it from us, guys. That's it from us. Hope you guys enjoyed, you learned. Let's get ready for these movements, right? Have yourselves a good day. Enjoy the rest of your day. Good luck. And we'll catch you guys later on today. Cheers, everyone.